Welcome to Your Money, Their Hands. I'm Emma Wall and I'm here at the Fidelity building to talk to Tom Stevenson, Fidelity International and Sunday Telegraph columnist. Hello, Tom.
Hello, Emma.
So the market has reached 5,000. Do you think it's got much further to go?
Well, we've had quite an extraordinary year so far. I mean, the market has risen by 60% plus since it bottomed out in March. And that's not unusual when the market emerges from a recession, as it is at the moment. The market moves hardest and fastest ahead of the actual recovery in earnings. And so what we've had 6 months of anticipation when the market has moved very fast. And just now things are beginning to come through in terms of earnings recovery, and a lot of companies are pushing through really quite good earnings reports. Now what happens then with the market is, interestingly, it's almost better to travel than to arrive. And the market has gone very fast in anticipation. Now we're there, the market sometimes holds back and pauses for breath, and I think that's what we're going through at the moment, and that's why the market feels like it's slightly running out of steam.
And who would you say have been the winners of the last 6 months, and going forward, who are going to be the winners of the next 6 months?
Well, when the market is in this anticipation phase, it looks for companies which are going to benefit from a recovery in the real economy. So you get the financials do well, the consumer cyclical stocks do well, the retailers and the leisure stocks, those kinds of things, and they have performed extremely well. And also smaller companies, which tend to be more geared to the movements in the economy, do well. So I think that's what's happened over the last 6 months, and I think we're going through a kind of transition at the moment when I think larger companies will probably start to do well, and I think more defensive and growth companies will start to do better than the cyclical companies which have led the charge so far.
And what sort of defensive companies are you talking about?
Well, things like telecoms, utility stocks, because what's happened with the cyclical stocks, the multiples on which they trade, the multiples of earnings which investors are prepared to pay have risen quite sharply. And some of the more defensive stocks, as I say, the utilities, the telecoms, that kind of thing, have really been left behind, so they look better value now.
And if there is going to be this pause in the UK, what's the story globally?
Well, that's very interesting. If you look at the performance of some of the companies which are announcing their third quarter results at the moment, the ones which are doing well are the ones which really have exposure to the emerging markets. So, for example, GlaxoSmithKline and the Prudential, just in the last week, they've both announced good results from their markets in Asia and other emerging markets. So I think the long-term story of this shift from west to east is still very much intact.
Thank you very much, Tom.